Welcome students to the next class on journal problems. I hope this is the third or fourth problem which I am solving on journal. Now the problem is stated in the next slide. Copy down along with me. Yes, journalize the transactions in the books of Messrs. Bhanu Traders. Year is 2017. January 1st commenced business with cash 2,30,000, goods 1 lakh and building 2 lakhs. 4th January bought goods for cash rupees 5,000. 8th January sold goods rupees 30,000, costing rupees 30,000 for 35,000. Now when two amounts are given, students, always remember whatever amount is given in the bracket is your purchase price. So whenever two amounts are given, you should consider the amount which is on the outer side. So sold goods costing rupees 30,000 for 35,000. So to confuse, they will give you all sometimes such transactions. So when this word costing comes, it will be your purchase price. Purchased goods from Rahul 55,000. 14th sold goods to Varun costing rupees 50,000 for 60,000. Now when I say costing rupees 50,000, this amount of 50,000 is your purchase price. So 60,000 is to be considered. Next, paid for Rahul in full settlement. Now when I say in full settlement, that means you are going to put an end the relation between yourself and Rahul. So Bhanu Traders and Rahul are going to complete the existing relations. So in full settlement has the element of discount which is existing. Next, received from Varun in full settlement rupees 59,000. It is on 20th. 25th, depreciation on building. Now this depreciation is nothing but it is a permanent reduction in the value of fixed assets. So whenever we keep using fixed assets for business purpose, there will be certain loss in their value. That is a permanent loss. So such permanent loss in the value of fixed assets is treated as depreciation. Next, on 30th, fresh capital introduced 50,000. On 31st, took bank loan from rupees 10,000. Now, we are going to follow the same steps. First, assume ourselves to be Bhanu Traders. Then, we are assuming these transactions are going to be recorded in our own books. So, first, I will take each transaction, classify the assets, liabilities, expenses or capital and then apply the rules of debit and credit. So the rules are debit, increase in assets or expenses, and credit, decrease in assets or expenses. Similarly, credit, decrease in capital, assets or liabilities, and credit, increase in capital, assets, capital, liability or incomes. Now these rules have to be written somewhere in the corner of the page so that it will be easy for us to refer what is to be done. So we'll see what is the journal, how it is prepared. Now on top you write, you know in whose book you are writing. So in the books of Messrs. Bhanu Traders has to be written. Then you have to write journal. Now what is given in block form is only the journal. it is having only date, particulars, ledger folio, debit and credit columns. Now this details of transactions are for our reference, so that we will not be moving the slide for every transaction. So I will take the first transaction, commenced or started business with cash, goods and building. Now cash, goods and building are increasing the assets. So as per the rule, increase in assets is debited. So on the journal, I will write in the date column 1/1/2017. Next, cash account is debited with 2,30,000. Now instead of goods, these are the stock of goods held for resale. That's why I will refer it as stock. It is opening stock. Stock account is debited 1 lakh. Building account is debited with 2 lakh. Now whatever investment I have done in the initial basis will be equal to my capital, that is 5,30,000. Remember, always our debit should be equal to our credit side, because there is one benefit of giving and another equal amount of benefit receiving. So we will be having equal debit and credit. So all my assets increased are debited and my capital increase will be credited. Started business with cash and other assets is my narration. Now draw the line to show the transaction is complete. Next, on 4/1, bought goods for cash, rupees 5,000. On 4/1/2017, by mistake the word 2 has come, there is a printing mistake. So 4/1/2017, your amount of purchases is 5,000. So purchases account is debited to cash 5,000. Narration, bought goods for cash, because purchase is expense. So it is increasing my expense, it is debited. Cash is paid, reducing the asset, so it is to be credited. On 8/1/2017, sold goods costing rupees 30,000 for cash, rupees 35,000. Now when I am selling goods, generation of income is there. So when generation of income is there, that means it is to be coming on the credit side, and I am receiving cash on the sale of goods, so increase in asset. So cash account is debited to sales 35,000, 35,000. Now this amount of 30,000 is the cost price of the goods that have been sold. So I will not consider, because it is my purchase price. I am selling at what rate, only that is to be considered when two amounts are given in the transaction. Next, on 10th, I am purchasing goods from Rahul on credit. So I'll write the date 10/1/2017. Purchases is a expense, so it is increasing. So I'll write purchase account is debited. Because it is a credit transaction, I have a relation with Rahul. So my Rahul becomes the creditor. So increase in liability is credited. So purchases account is debited to Rahul 55,000 and 55,000. Narration, purchased goods from Rahul on credit. Next, on 14/1, sold goods to Varun on credit, rupees 60,000. The cost is 50,000. So when I am selling goods, now sales is a income and I am selling it on credit. That means Varun has not paid the amount. So he becomes my debtor, because he has to pay for the goods that are taken by him. So I will have increase in my debtors. So debtor is asset. So Varun's account is debited because he is my debtor. Increase in debtor asset. So his account is debited. Varun account is debited to sales account. Sales is a income, generating income, so credit increase in incomes, so 60,000 and 60,000. Next on 18, so on 18 I have paid cash to Rahul in full settlement of rupees 55,000. Now 53,000 is to be paid. So now if we see the previous transaction on 10th, we had purchased from Rahul goods worth 55,000. So now when I am paying cash, paid cash, so one account is cash, one account is Rahul. So Rahul is being a creditor, there is decrease in the liability. So Rahul's account is debited with 55,000. Next, you are having cash paid. So cash is going to decrease. So cash account is on the credit side because it is decrease in value of asset, 53,000. Now if we see the debit side and credit side, they are not matching because there is a difference of 2,000. So this amount of 2,000 is treated as discount earned. So it is to discount account 2,000. So whenever discount comes on the credit side, it is treated as discount earned because it's a gain. We are not going to pay, it's a gain, so it comes on the credit side. And when we see discount on the debit side, that means the discount is given to the customers. So discount allowed is a loss, whereas discount earned is a gain. So narration: paid cash to Rahul in full settlement. So the relation between Messrs Bhanu Traders and Rahul is completed. On 20th, received cash from Varun in full settlement 59,000. Now when I am receiving cash, it increases. So cash account is debited. Next, Varun, he is our debtor. So this debit account or the decrease in the value of debtors is to be credited. So I leave 2 lines and write to Varun's account. Varun has to give us 60,000, but he is only paying 59,000 because we are settling it for 59,000 or allowing discount for Varun because of prompt payment or some reason. So cash account debit is 59,000. Since he has not paid 1,000, that is treated as discount allowed. So 60,000 minus 59 gives me 1,000. Next, Varun account is credited with 60,000. Narration: cash received and discount allowed. Now on 25/7, depreciation charges to building rupees 10,000. Now as I told earlier, depreciation is a loss in the value of machine. So not machine, it is in the value of fixed assets. So your building is losing its value by 10,000. So this 10,000 is a permanent loss in the value of the building. So you are taking depreciation as a expense or loss. So it is increasing. So loss is increased by 10,000. I will write depreciation account is debited to building account 10,000, 10,000. So narration is depreciation charges for building. Next, on 30th, I have fresh capital introduced. Now cash is again introduced, additional cash is being introduced in the business. So asset is coming in the business, so cash account is debited 50,000 to capital account because this is additional capital introduced during the year, that is 50,000. So cash account is debited to capital 50,000. Fresh capital introduced is my narration. Now coming to the last transaction on 31/1/2017 took loan from bank rupees 10,000. Now whenever loan is being taken, bank will credit such amount in my account. So my bank balance is increasing. So when bank balance increases, bank account is debited because bank is a asset. So bank account is debited to bank loan. Now loan is a liability. Because it is taken from bank, I will treat it as bank loan. So bank loan being a liability increases my this liability, so it is to be credited 10,000. Narration took bank loan. So here we come to an end of our journal. I hope you all followed. For any difficulties, you all can contact us anytime. In next class, we'll see one more variety of problem and then try to wind up this topic. Thank you. Till then, be safe and happy.